Hi everyone, welcome back to the US individual taxation classes enroll agent part 1. This particular video is in continuation of the previous video which we have started on cost recovery. Yes, in this video we'll be understanding more about depreciation and the method of depreciation, which is in continuation of the previous video on cost recovery. So if you have not watched the previous video, request you to please take a look at the previous video and then continue from there. Let's dive into to understand more in detail. Hi everyone, welcome back to the taxation class. So before we went on a break, we started with the cost recovery. I think we have covered almost the depreciation part. In this cost recovery, we have three parts: depreciation, depletion, and amortization. So depreciation, section 168, we have covered. And then we jumped onto the personal property, real property, mid-month, half-year, mid-quarter, all this concept. Then we covered section 179, and then we covered, I think, so till here we have covered till 102 page. So now the another depreciation is called alternative depreciation system. So most of the time for tax purpose, we use 𝐂𝐴R system, which we have studied. But in some circumstances, we can use alternative depreciation system also. Generally, that is straight line method of depreciation. It may be used for depreciation of the property which are predominantly outside the USA, right? Or maybe for a tax exempt entity. In the US also, there are certain entities, or you can say places, which is being considered as a tax-free zone. Like in India also, you might have heard about like special economic zone, and you might have heard about tax-free zones. Have you heard about them by any chance? Tax-free zone, or tax-exempt zone, or maybe special economic zone. Like here in Gurgaon only, if you see, the earlier this sector 34, if you have seen, there are so many buildings over there. They comes under the IT park, sector 34, 39. There are so many buildings which comes under IT park or SEZ. So there are certain exemptions were available earlier. So same way in US also, when the government wants to develop any underdeveloped area. For example, in India, if you see, like, have you heard about this place called Baddi, Parvanu in Himachal Pradesh? Have you heard about these places? Or maybe like Aurangabad in Maharashtra.
Yes, sir, Baddi, Himachal, for medicine factory.
Yeah, so if you've seen, like, those all were, like almost 2 decades ago has been declared by the government of India as special economic zone or tax-free zone. And they have invited a lot of companies to make the capital investment, and based on that they have provided certain tax benefits both on direct tax as well as on indirect tax, and people have, a lot of company has made a huge investment. If nowadays, if you see in Baddi, the one of the largest pharmaceutical company, which is 𝐂𝐴𝐧𝐿ine, they have like very big plant over there, and there are other like many medical company also are there, and then manufacturing company, packaging companies are also over there, right? So that's how like government play by providing tax benefits to the corporate by declaring certain zone as tax-free zone, right? So if any investment or any capitals assets are being in those area, so for them also you can use alternative depreciation system, because the two things applies. There would be some bonus depreciation, right, which we have discussed earlier, and after that whatever is the remaining can be used by the alternative depreciation system, which is generally a straight line method of depreciation. Second is finance with any tax exempt bond. So central government or maybe municipality government have issued certain tax exempt bonds, which like people in general do purchase for the benefit of tax purpose, and with those bond, like if any investment has been made, so those investments through which like capital expenditure has been made can also be used alternative depreciation system. Fourth is imported from countries engaging discriminatory practice. So there are certain countries which is being considered, like as where the nation as a United States of America, we have soft corner and we do support. Like if you see, there are many countries in European nation to whom like US do support function. So any such investment in the capital expenditure has been made in such country like Puerto Rico. If you see like in Latin America, there are many small, you can say Iceland, right? So there, like like United States of America as a nation, they do a lot of support to them. Same way, like in India also, if you see, we do like a lot of support to Sri Lanka, Bangladesh, Andaman Nicobar, or maybe like neighboring countries. Same way, US also do like support to many neighboring country where any investment is being made, capital expenditure has been made, so it's being open and flexible to use the alternate depreciation system rather than MECAR. That option is also available. Next is FE point is listed property use 50% or less in a qualified business. So for example, if you are consider MECAR depreciation method, but those assets are being used for less than 50% for the business purpose. For example, you purchase a car for an office purpose usage, but actually you are using it both for personal purpose and office purpose, and you are using it for personal purpose more than 50%. Then in that case of scenario, you cannot take benefit of MECAR tax system, rather than you can take the benefit of alternative depreciation system, right? And certain farming equipment also, they can also use alternate depreciation system. Generally, depreciation under the method is calculated by using straight line method without regarding to the salvage value. So that is very much common for the tax purpose. Whenever you are using depreciation, salvage value is not considered. Generally, tax depreciation on the entire value of the asset. Whereas book depreciation consider the reduction of salvage value. That's generally a difference between book depreciation and tax depreciation. Depreciation of personal property for alternative minimum tax is calculated by using 150% declining balance depreciation and switching to the straight line method when appropriate to maximize deduction. What is alternative minimum tax? Do you guys remember this concept we studied in very first class? What is alternative minimum tax?
So it is the tax which is again imposed on the taxable income.
Say it again.
So जो टैक्स दोबारा लगता है जैसे हमने
No. That's called double tax. What is alternative minimum tax? I think we discussed in very first class where we discuss all the
minimum tax that an individual needs to pay, which is carry forward to the next year.
Partly right, partly wrong.
Okay.
Divya, Garima.
So like it is the tentative minimum tax for the year is greater than the regular tax for that year. Like I just
Say that
read
again.
about it. I forgot, so I just read about it. It's like an alternative minimum tax is owed only if the tentative minimum tax for the year is greater than the regular tax for that year. Like the excess of the tentative minimum tax over the regular tax.
Partly right, but not absolutely correct. Okay, so alternative minimum tax. When we need to calculate the alternative minimum tax, when your normal tax rate is not coming out anything, it's almost zero or negative. But whereas you have certain incomes, which are specific categories of income. There are 5 categories of income has been given for the calculation of AMT. So you need to add back those items to your gross profit, and whatever is the amount coming out, on that government wants you to pay the minimum tax. So generally, alternative minimum tax rates are lower than the normal tax rates. So in the normal tax rate, let's assume 25%, and AMT is generally 15%, right? So that is the minimum amount that government want you to pay the tax, whether you have taxable book taxable income or not. But there are certain items which IRS wants you to add back and consider as your taxable income, and on that taxable income you need to pay the minimum tax rate. But this tax is being available to you as a credit, so you might be paying it as of now, but this is being available to you as a credit in future. When you have normal taxable income, then you can adjust this tax which you have paid in earlier year under the AMT and pay in future less tax liability. That is called alternative minimum tax. So point here is depreciation of personal property for alternative minimum tax is calculated at 150% declining balance depreciation method. What is 150% declining balance depreciation? Have you studied this in your school or college? Declining balance depreciation method. Mayank, Shubham.
Diminishing and straight line method.
Yeah, WDV. Right? So, for example, let's say you have an assets of this $1 million. Let's assume. Let's take this example. Let's take this example. So let's say you have a solar plant for $1 million, and the life is, let's continue, 10 years. Life is 10 years. For tax purpose, life is, let's do this, life is 10 years. So depreciation. So for book purpose, you are using, let's assume, straight line method of depreciation. So this is your depreciation. But let's say SLM for books and written down value for tax purpose at the rate of 150% declining. Balance. What is declining balance of depreciation? Any idea?
So like 150% declining value, you're saying? 1 lakh rupees? Or 10,
So,
1 lakh, yes.
1.5. So this will be your year 1 depreciation for tax purpose.
This is 50,000 excess.
So when you have more than 100% declining balance method, so in upfront, in the initial year, your tax will be less because your depreciation is more. And in later year, your tax will be less, but depreciation, in later year, your tax will be more and depreciation will be less. Make sense?
Yes.
So government published this table that automatically provide for each of the special convention that a taxpayer may use in a year of acquisition for both real and personal property. So every year, government of the United States of America, or you can say IRS, they publish the table for the tax rates applicable for the respective category or class of assets. Special rules for the automobiles. Automobiles include car, trucks, and SUV. If you are using it for business purpose less than 50%, then it does not qualify for MECAR. So if you have purchased a car and you are using less than 50% for the business purpose, then you need to use alternative depreciation system. You cannot use MECAR and you cannot claim bonus depreciation under section 179 for the year 1. Second thing is, it must be depreciated under the alternative depreciation system, which is your straight line balance depreciation method. If you are using the automobile for more than 50% for business purpose, then you can use MECAR, and section 179 depreciation is also being allowed. If further business usage, maybe like initial first year or second year, you are using for more than 50% for business purpose, but let's assume in year 3 you are using less than 50% for the business purpose. What will happen in that case? In that case, a permanent switch to straight line method of depreciation is required. And in addition to that, if in the earlier year you have charged more depreciation, then you need to recapture that depreciation and need to pay taxes on that in current year. Make sense? Shubham, Mayank?
Yes, sir.
Garima? Rajat?
Yes, sir.
Got it?
Yes.
If
ये जो
early,
depreciation recapture करेंगे pro rata basis पे है ना?
So I'll show you an example. Let's assume in this example, so in this year 1, let's assume you have a $1 million truck, right? For that in year 1, you charge 150,000 depreciation based on MECAR. And now in year 2, you are using it less than 50%. So if you are using it less than 50%, you are supposed to charge a depreciation of 100,000, right? So in previous year, you charge how much? 150, but you were supposed to charge 100,000. So on this 50,000, it will be your taxable income. So you need to add back into your taxable income in year 2. That is called recapture of depreciation. Make sense? Mayank, Shubham, Garima?
Yes, sir. Yes, sir.
Yes, sir.
So that is called recapture. That means the earlier, when you have taken additional benefit of depreciation, on which now you need to add back to the income and you need to pay taxes. Additional limitation for luxury automobile. So the automobile could be of 2 categories, normal automobile or luxury automobile. So luxury automobile is the car you guys have chosen, or a Lexus, Cadillac, right? All this car which is more than kind of $50,000 are luxury car or sports car, right? A dollar limit of depreciation is mandated for each year the car is used. So in that case, if you are using luxury car, and then it says there is a certain dollar limit up to which you can claim the depreciation. If let's assume you have purchased a $250,000 sports car, right? So, like IRS say, you won't be using it for the business purpose, right? You'll be enjoying it for your luxury. So maximum depreciation is being allowed to certain limits. So what are those limits which is being defined in the TCJA Act? Is in year 1, $10,000, in year 2, $16,000, in year 3, $9,600, and year 4 and after that, $5,760. Right? And if you are this depreciation, if you are using 100% for business purpose, if you are using less than 100% for the business purpose, proportionate depreciation need to reduce.
लेकिन सर आई हैव वन क्वेश्चन लाइक सर जैसे लोग कहते हैं कि जो एक्सपेंसिव जैसे जो बहुत रिच लोग हैं दे यूज either like the $500,000 cars only only to take the tax advantage like जो हमने अभी पढ़ा है ना सर ये जैसे ऊपर डेप्रिसिएशन एडवांटेज लेने के लिए लेकिन सर जैसे आप कह रहे हैं कि ये लग्जरी कार्स में अलाउड नहीं होता ऑल्दो सर हम यूट्यूब पे भी देखते हैं कि जैसे जो टैक्स के बारे में बताते हैं कि वो टैक्स के एडवांटेज के लिए ही वो गाड़ी खरीदते हैं इतनी महंगी महंगी गाड़ी है ना जैसे
Yeah, but like the maximum limit is this 10,000, 16,000, 9,600, and 5,760. Not more than that.
Okay.
But yeah, if you take those car on lease, then lease
Yeah, यही सब मैं पॉइंट मिस कर गया लीज पे वो लेते हैं तो टैक्स एडवांटेज मिलता है
yes, so yes, lease is allowed. Lease expense is allowed, but depreciation is not.
So
Yes.
like just the point said, I'm having doubts, sir, like how purchasing luxury cars can give us tax benefits.
No, that's what I'm saying. The tax benefit is limited to this much amount of depreciation. So for example, if you have purchased this Corvette, right? Am I pronouncing right? Or Corvette, sorry. If you purchase this Corvette, $120,000. Let's assume the life is 5 years, right? If the life is 5 years, so depreciation ideally should be $24,000 a year.
Yes, divided by 5 years.
Right, divided by 5. Ideally, it should be 24,000. But
Yes,
this comes in luxury brand. So maximum depreciation you can avail is $10,000.
Okay.
So rest 14,000 will not be allowed for tax purpose.
Yes.
Make sense?
Yes.
Following automobiles are not subject to luxury automobile limitation, which include trucks, SUVs, vans over the weight of 6,000 pounds.
Sir. Also, I have a doubt, sir, like some hotels have luxury cars as a commercial vehicle. So will they come under like limitation?
No. That is for the business purpose.
Okay.
Very good point. Like taxis, limousines, all those.
Yes.
So exam tips. Personal property like furniture, computer, machinery, automobile, equipments, you'll be using either half-year convention or mid-quarter convention. But for real property, always use mid-month convention. Right, which we have studied in morning. Now coming to the next topic, recovering the cost of leasehold improvements. So for example, you have taken any property on lease and you have done like infrastructural change. That is your leasehold improvement, right? So if that infrastructural change which you have made is in lieu of rent, that means if you are making all those infrastructure and it will reduce your rental expenses, then deduct that amount as a rent expense and include as income of the lessor. So in the books of leasee, it will be reduced as rent expense. In the books of lessor, it will be rental income. If not made in lieu of rent, that means you have made at your own choice, then the leasee can capitalize and recover using MECAR. Make sense? Simple?
Yes.
Next is recovering the cost of intangible assets. Intangible assets is your copyright, your trademark, your patent, your goodwill, right? Those all comes under the intangible assets. So useful life is less than 15 years. If for those intangible assets, the useful life is less than 15 years, then amortize over the useful life. So for example, if you have patent that has a life of 5 years, you need to amortize that cost over the period of 5 years. If you have patent which has a life of, let's assume 25 years, in that case of scenario, you will be amortizing the cost over 15 years. If you look at right hand side, if useful life is 15 years or more, then amortize the expense over 15 years using straight line method of amortization. Make sense? If the life of intangible asset is less than 15 years, then amortize the expense over the life of assets. If the life of asset is more than 15 years, then you need to amortize over the 15 years. So maximum life for the depreciation or amortization purpose for the intangible is 15 years. Make sense? Right? Any doubt here? Okay, so interest in land, financial interest, software, mortgage services, and lease of tangible personal property are excluded from definition of section 197, which is intangible assets. Right? So land is non-depreciable asset. Financial interest comes under the separate purview as interest expense. Software, mortgage services, leases, they're all being treated differently, will not come under section 197 as a intangible assets. Research and experimental expenditure may be expend in the expense paid and incurred during the year. Expenses. One second. Paid and incurred during the year, capitalize and amortize over a period not less than 60 months, or capitalize or amortize ratable over 10 years, and thereby avoiding any alternate minimum tax. The consideration as this will not more than the tax preference for the AMT purpose. Let's do a practice question really quick. Jerry owned a duplex. He lives in one half and the rent out the other half at fair rental value. So Jerry has a duplex home. So half portion he is living and half portion he has rented out at the fair rental value. He wants to take depreciation on the building, the appliances, and the major remodeling in the bathroom and rental side. On the rental side he has made. What depreciation may be taken? 27.5-year MECAR on both the side of duplex, 5-year MECAR on appliances and remodeling. Second is 27.5-year MECAR on both side of duplex, 7-year of MECAR on appliances and remodeling, 27.5-year of MECAR on both side of the complex, and 7-year of the MECAR on appliances and remodeling. 27.5-year of MECAR on rental side, 0 on personal side, and 7-year MECAR on the appliances side and remodeling. Which depreciation he should use?
So the second and third option are the same.
Yeah, looks same. Yes, there might be some typo error, I think. Just give me a second. Let me.
Yes.
Let me check on this. Yeah, so there's some typo error. Sorry. My bad. So it's 27.5-year MECAR on rental and remodeling, 5-year. And no depreciation on personal side. So which one is right option and why? So residential property So what is the depreciation life? 27.5 years. Are you guys with me?
Yes, sir.
And for non-residential property, how much is the life? 39 years, right? So 27.5 years of MECAR on rental, right? The area which you have provided on rental, right? Your personal side, you cannot charge depreciation on that. Personal properties are not required to be considered for depreciation purpose. So one thing is clear, the life we need to consider 27.5 years, and we need to consider for rental area.
So the
Now
rental,
coming to the remodeling part, right? How much depreciation we should be charging for the remodeling? That is for the 5 years,
5 years.
right? If you see 5-year and 7-year category, which we have discussed. One second, I'll show you. Yeah. So if you see this, these all are assets which are generally 5 year, and this include like the office equipments and office machineries. So it will come under this category. Right?
So sir, like only the rental property is like a business purpose, so
Yes.
that will
Yes.
be depreciable.
That will be considered for the depreciation. Your personal side will not be considered. That's
Okay,
your
sir.
personal asset. Right? Okay. So next is depletion. That's it. Maybe we can stop over here. So we have just few more pages that we can cover tomorrow and finish off this chapter. So we can take a halt over here, and tomorrow, like, we will finish this chapter completely. So we have few more pages. If I start now, then we'll be having very less stuff to cover tomorrow. So tomorrow we'll spend in a stretch 2.5 hours, and we'll finish off this